It's my pleasure to welcome Michael Saylor to the MIT Bitcoin Expo this year. Michael is a technologist, entrepreneur, business executive, philanthropist, and best-selling author. He currently serves as chairman of the board of directors and CEO of MicroStrategy. Since co-founding the company at the age of 24, Mr. Saylor has built MicroStrategy into a global leader in business intelligence, mobile software, and cloud-based services. Welcome, Michael.
Thanks for having me.
We know MicroStrategy owns over 9,000 Bitcoin, being one of the biggest institutional adopters to the Bitcoin standard.
90,000, more than 90,000.
I apologize, 90,000. With MicroStrategy, you guys had that conference that really focused on businesses. And there's rightfully so, the institutional adoption is very important for Bitcoin. I was wondering if then for the people that don't have a business or maybe don't think in the scale of a business, if you could maybe just talk about the different perspective between acquiring Bitcoin for your business fiduciary duties and acquiring Bitcoin for your personal fiduciary duties.
I think people that understand Bitcoin understand that what's going on is exchanging of soft money for hard money, or conversion of analog assets to digital assets, or taking open paper sitting in a box in your backyard that anybody can borrow or steal and convert it into an encrypted money that's in a bank in cyberspace that nobody can steal. It's a transformation. The way that people understand Bitcoin is they think it's a speculation. They don't understand. If they don't understand it or they're afraid of it, they think it's a speculation and it's an investment, and they're thinking Bitcoin versus silver versus gold versus GameStop versus Tesla. That's what they're thinking. When they understand it, they say, it's just a conversion from a soft asset or an analog asset to a digital asset. So how should an individual think of it? Well, if you're going to make $100,000 a year for the next decade, and if the US dollar is going to weaken at 15% a year, you should discount your cash flows by 15% next year, by 30% the next year, by 15, and 15 cubed, right, the next year, and by 15% to the 10th power. It isn't a hard sequence to figure out, right? Your purchasing power is going exponentially to zero. All you got to do is fill in what is the percentage weakness of the money to figure out what your purchasing power is going to be. This is the same math you would do for an individual dentist or an engineer or a small business or a large business. Or if you held a bond and the bond's paying you $100,000 a year, right? It's the same exact math. It's just discounted cash flow. Once you figure that out, then the question is, what are the consequences of me continuing to work in the US dollar? The answer is you have to basically grow your salary faster than the rate at which the currency collapses. So if you can raise your salary 15% a year every year forever, then you'll have the same amount of money in 10 years as you have now. By the way, you won't get rich. You'll be getting paid $1 million a year at some point, and it will buy you nothing. But that's one strategy. The other strategy is you convert your existing assets. Should be fortunate. If you are fortunate enough to have assets invested in bonds, commercial real estate, or equities that are valued on cash flows or sitting as cash in a bank, you convert that into the hard asset, which is Bitcoin, as much as you dare. Some people say 5%, some people say more. I've done 400%. My view is first I convert all my stuff, then I borrow money, then I convert that. But everybody makes the decision as to how invested they want to be in the digital asset universe versus the analog asset. After you decide what portion of your existing assets you should convert, you can decide if you want to forward finance your cash flows. And if you can, and maybe you do, I did, but then you decide you want to finance your other assets. Like you have a house, you have $1 million house, you can borrow $800,000 of it. Maybe you can borrow an $800,000 home equity line at 2.5% interest. Well, if I borrow $800,000, pay 2.5% interest, invested in Bitcoin, paying 250% interest, it's a 247% arbitrage, right?
Yeah, it's a great deal.
Some people are afraid to do that, I would say, well, you get to borrow money against your house to buy a dominant digital monetary network growing more than 200% a year that's got a monopoly on money that should grow by a factor of 100. Sounds to me like a better, by the way, the same people that are afraid to do that will start up their own business to complete the next Snapchat. It seems to me like creating the next Snapchat's a lot more risky than buying a piece of a monopoly digital network that's more powerful and more useful to everybody on earth than anything ever invented in your lifetime. But everybody assesses risk differently, right? Our brains are wired differently. I would say, if you can finance your house, finance your house. If you're lucky enough to have it, if you can sell equity in yourself or in your business, you want to sell equity in your business? Okay, good idea. Invest in something related to Bitcoin because it's growing by a factor of 100. Better idea, buy some Bitcoin with the money and then borrow against the Bitcoin to invest in the thing that you think is cool, because there's a 99% chance that a new business fails, but in the 99% probability that your Snapchat substitute fails or your TikTok competitor fails, if you finance the business in Bitcoin instead of in US dollars while you were failing, you're going to get rich. And so this is the thing that a lot of people can't get their heads around. It's less risky to launch a company with your treasury invested in Bitcoin than to launch the company with your treasury invested in dollars. And it blows their mind because they think that the dollar is the safe place to put their cash until their business works. If there's a 200% arbitrage between the dollar and if the dollar is collapsing at the rate of 200% a year against Bitcoin for the next 5 years, it won't have been a prudent thing to save your money in dollars. I think everybody's got to think of it the way they want to think of it. You can't tell people how to invest their money or how to treasure their money. I do think the road to serfdom is working exponentially harder for currency growing exponentially weaker. And the strategy does matter. If I drop you, Daniel, in the middle of Argentina or Zimbabwe or Venezuela for a decade ago, and I said, go at it and do whatever you want, and you can, let's say you're the best person in the entire country, the smartest person in the country, and you have the best idea in the entire country. Can you come up with an idea that's better than convert all your money back into dollars before you do that? I think we're going through a paradigm shift in monetary economics. It happened at a low level for the past decade while Bitcoin was expanding at 200% a year. But since March of 2020, Bitcoin's been expanding at 600% a year plus. So it's the conversion of fiat money and analog money to digital money, the digital transformation of base layer money has accelerated dramatically. Bitcoin's now $1 trillion digital monetary network. It's the fastest growing thing in our lifetimes. It's the most powerful technology of our lifetimes. It's going to continue to disrupt every industry. It's going to change the lives of 8 billion consumers, of 100 million businesses, of every investor on the planet. It's going to impact the valuation of $500 trillion of assets. 99% of the world doesn't understand it. They think it's a fad. They think it's a bubble. They think it's a rally. They think it's a strange thing. And so if there was ever a thing that needed to be educated, or if there's ever an idea that needed to be introduced to society, and if it was ever good for people to learn a new thing, I would say that this year, this thing is the single most important thing of our life.